All right, guys, so we are about 14 minutes here away here from the market open here on Monday. Um, we are taking a look at gold, obviously, and we did pull back last night. Um, I was looking last night. There wasn't really much going on. Um, my whole thought process last night was that we needed to maybe come down first before we could maybe just continue moving up, because obviously we weren't going to have enough volume last night, Sunday night, to really have a move to the upside from this level until we come down further. And so here where we are, um, really just looks like a great risk to reward long position because um, where we have come down, right? Obviously back here we retested this level again, and so we have not come down again to this level at the moment, but we pulled back pretty nicely, made a low, and came up and are now retesting that low. So if we go down to a 15-minute chart, looks a little bit more spread out. Stop loss would just need to be underneath this structure just as a, you know, clearly a safety precaution, right? Because, um, although we are retesting this minor level here, and we have already come down to this level previously, um, it is still safe because we could get some wicks. Maybe we do come back down a little bit further, but overall, the structure is what we are looking at, and the structure is why this is a great position because, um, like I said, we came down, we had a high volume bullish candle. Now we're coming back and showing signs of respecting this minor support. And so, of course, just to be safe, then stop losses underneath here, and just looking for a decent ratio, 3 to 1. Obviously, again, we'll have minor resistance here, and then we are in, again, uncharted territory, levels we haven't seen. So, um, anyway, that's what we're looking at now. And yeah, pretty simple structure, not really too much to talk about. Um, the thing about our stop loss here is obviously this is for, just like I said, just to be careful and be extra safe. Once we can clearly break above this minor resistance, it would be, more comfortable to move maybe underneath here, right? But yeah, at the moment, that's just what we're looking at for gold. All right, guys, so right here, I actually am totally out of this at the moment, um, really because of this candle here. I know it may just look like somewhat of a doji, but has a sizable bottom wick and a sizable top wick. But really, and we can see this on the 15-minute chart. This is really, and I know it's because we're getting closer to the market open, but this is really just a sign of increased volatility. And with where I am now, I'm happy with this position that we've been in for quite some time. And so getting out now, if there's a nice opportunity at 7:30 at the market open, maybe we can look for something else. But really, this is just a sign of an increase in volatility, and it's just not really worth the risk to get a potential, spike to the downside. Maybe have, if you wanted to, if you were okay with that, have stops just below this structure. That way, in case that does happen, you can get out pretty quickly, right? That is a good idea, but at the moment, I'm happy with everything, and yeah, uh, you know, happy with how this trade has gone. So, anyway, that's just a quick little update. That's something that I'm just not really a big fan of. It may not be a big deal. I might just be, paranoid. But anyway, that's that. All right, so some more time has gone by, and looking back, it's actually really smart where we got out of this trade right at about here. Because again, remember I was saying that we had um, these these large wicks, right? We had all these spikes here, and so that is a sign of an increase in volatility, which that was correct, right? Because a couple candles after we got the start of this move to the downside, so we can just delete this long position here. But anyway, so our exit right about here was pretty much a perfect exit. Could have gone a little bit higher, but you don't want to try to be too precise, right? So, um, right, like I said, that is a sign of an increase in volatility, which we did get, and so that caused us to, move to the downside. So now we have broken this structure, and we are moving lower. It is 9 o'clock. So market's been open for an hour and a half. It's a Tuesday, and so we're not at the end of the week. We're not at the beginning of the week. And so what we could look for here is maybe just wait another couple of candles, but maybe depending on this candle and what happens next, we can get a move up. Um, where is that? Can get a move back up, maybe bounce around, and then have a move to the downside, right? Obviously, I know this is gold. We are still clearly in an uptrend. This would be our bearish case scenario. If we get something like, maybe we come down here and start to respect this level, and we can then work our way up. But again, it's sort of telling to see if, relative to where we are now, if the first level we really test, is it this level down here that we would test as, um, oh man, I can never find this. We need to see if the first level that we test is this level here or this level here, right? If we test this level first, which it looks like we might, um, I'd be more likely to look at this level as finding a nice support, maybe a little bit lower, maybe it's not exactly here, maybe, somewhere down here. Um, but if we immediately pull back up and retest this level we just broke as resistance, then I'd be more open to looking for a potential larger move to the downside, right? But if we come down here first, I'd be more open to looking for more support to be established like this and then working our way back up, right? Hopefully that makes sense. But anyway, so hope that exit makes sense what I was saying about when we have a nice bullish move to the upside, right? We have some high volume candles in here, and then we start getting these wicks to the downside where we're still pushing back up, right? But that means that we have that selling pressure moving us down, and so that was really my indication of looking for an exit for this position. And yeah, that's where we got. We got out pretty much at the top. So um, from our entry down here, um, up to, excuse me, from our entry down here to here, pretty good position, pretty good trade. We had essentially a perfect entry, to be honest, and our exit was about as good as we could get. Yeah, like I said, we could have gone up a little bit further, but once we start to get these signs of these wicks, right, that's really my indication that it's time to get out of that. So anyway, we're gonna see what this does now. Obviously, you could have looked at this as some sort of shorting opportunity, but again, like I've been saying recently on gold, that's not really hasn't really been my approach. I'm just looking for more of these intraday moves, right? So um, anyway, but overall, really good interpretation of the market. I'm really happy about that. And like I said, with our next scenario we're looking at next, I just need to give it some more time and really just kind of wait for the price action to tell us what it's doing.